Hello, everyone, and welcome back to another segment of Experts Corner. Today, we have a great returning guest. We have Mark Gottselig from Global Agri Solutions. How are you?
I'm doing well. It's -6 and sunny out, so I'm doing real well.
Oh, nice. I thought we were doing well. It's like -24 and sunny, not minus like 30 and cloudy. So we're both happy.
Well, we're getting through it.
Yeah,
we're all getting through it.
Gotta love winters in Canada.
Yes.
On an exciting note, let's talk grain farming. Let's talk production cost insurance. Let's dive right in. Actually, Mark, I'm gonna throw you for a bit of a curveball here. Tell our audience a little bit about who you are. We didn't do it last time, and I thought about it after. I would love to know a little bit more about who you are and what you do, and then we'll dive right into production cost insurance.
Sure. So, Mark Gottselig, I'm the national sales leader for Global Agri Solutions. I've had that title, that role for the last couple of years, and really honored to be able to serve our company and those that have our product. So I'm a farm kid from just north of Moose Jaw, a little town called Finlater, Saskatchewan. Born and raised. I'm the oldest boy of 10 kids. My dad and uncle farmed together, and on the same farm we had both houses. They had 6 kids, we had 10, so there's 16 bodies running around the farm, and mixed farm operation, and so dear to my heart, agriculture, and then just about 10 years ago now, was asked to come on the Global Agri Solutions team, just a little startup company, and we've been growing our team and growing the company ever since. So a little bit about me and where I'm from, and what I believe I'm meant to do right now is to be able to really help farms in a different way, and just really honored to do that.
Love it. I'm so happy I asked. If you guys didn't catch the last segment, that's actually a good point for us to say, go check that one where we spoke about managing uncertainties and risks on the farm. Today, we're going to dive a little bit deeper into the subject, and we're going to talk about production cost insurance. I always go to say production crop insurance, production cost insurance.
Yeah.
You want to talk to our audience a little bit more about that, Mark?
Sure. And it's a question that's been asked a lot more this year than ever before, is what is Global Agri Solutions, or what is production cost insurance? So Global Agri Solutions is obviously the name of our company, and production cost insurance is our product. And it's our product and really our service that we have for farms. And so we are a full farm revenue product that farms can purchase and protect themselves with. So we guarantee a floor level of revenue for the farm. And so how we do that is we insure the actual costs of all seed, fertilizer, and chemical that the farm has at the end of the year, plus a margin over and above that they can choose. So it's called production cost insurance because that's really what it is. We will insure and guarantee, if not full cost of production, a really good high level that we can farms will know before they even start seeding. So we just to give an example, if you're a 5,000 acre farm, and you at the end of the year you actually purchase and use $150 of seed, fertilizer, and chemical, which we call the direct inputs. And then over and above that, when you purchase the insurance, you want to insure yourself for another $150 over and above that, just for easy math and round numbers. So that 5,000 acre farm now is guaranteed that floor revenue of $300 an acre, or $1.5 million floor set. No matter what happens to that farm, they have that revenue coming in before they even start seeding. And that guarantee, or that insured revenue, will float according to what they spend on seed for chem. So if they're spending more because all of a sudden, out of their really outlook in when they're budgeting, they have to spray grasshoppers once, twice, or 3 times, or they they want to top dress, or if they want to do a second pass of fungicide, that every single dollar that they spend on their agronomy, on their crop, equals another dollar of insurance. And so it floats as they farm, and it's really meant to be an insurance for the more progressive natured minded farmer, and it's really working well for a lot of people.
I love that you said that. I was actually watching some videos on the Global Ag Risk website, and I think it was one of your team members there. They said that it really helps farmers be the best farmer possible. So instead of being cost oriented and going, oh, okay, no, that's more cost, they're going, ooh, I need to do this to protect the crop, increase the crop. So they're not limited. They're not in that limited mindset, right? And I really like that point where you said, as the year goes, you can continue to make decisions, right? And your coverage floats with that. That's what you're saying, right?
Yeah. And many farms, there's farms out there that are a little hesitant, obviously, because the cost of production is so much right now to make those key decisions at the right time. And this product truly helps take that stress away. There's always going to be stress with cost of production, but this will take that stress of that making that decision away because of how we insure. And then there's farms that are already all in, no matter what they have for insurance. Well, it follows that mindset as well, because we are ensuring that progressive and that aggressive mindset that many farms have now. And so, yeah, it's working with all levels of insurance, or all levels of farms.
Love it.
Excuse me.
So I get you talking too much, eh? We get a tickle in our throat.
That's all right.
Okay, so on that note, then, why don't we look at the opposite end of the scale, a different product, traditional crop insurance? How is what you guys offer different than traditional crop insurance?
Yeah, that's again, that's asked a lot, and the key word there, Tracy, is different. Right? It's many people ask, how are you better? And it's not necessarily better, it's different. For some farms, it all depends on what you're looking at and where you're at in your farming. It might be a little bit better, but it is it's used in conjunction with for many farms. So traditional crop insurance, as everybody knows, is a crop to crop yield coverage. So they have a certain amount of a yield that they're covering on their farm, and if a farm experiences a little bit of a loss for whatever reason, it's a multi-peril product too, so drought or hail or anything, and it brings their overall bushels underneath that guaranteed mark that the insurance company will pay on those shortage of bushels. And that's really important to understand, and for not to get caught up in the total coverage, because it is not a revenue product, it is a yield product. And so there's been lots of instances in the past so far that we've dealt with. And, when I was helping my dad too, that they're just on that threshold of their guaranteed yield threshold. But the price drops or something else happens that they actually have a loss of revenue, but they don't get paid because they've grown their threshold. So that's what we have to realize, is that it is still a yield product. And of course, ours in comparison is a full farm. So we're not crop to crop, we're full farm. And we're guaranteeing or ensuring a revenue for the entire operation on the crop side. So I understand that you guys are cattle beef farmers. We don't insure any livestock, whether it's four-legged or two-legged yet, but we will guarantee that full guarantee for the farm before they even start farming, which is really a nice stress relief for a lot of farms.
It is. Stress. Farming is just stressful enough. Yeah. So having that floor, as you say, is just such a weight lifted off the shoulders, right?
Yeah, and it's a lot of farmers are it's an insurance that you can buy, but it ensures as much as it insures, and so insuring just means it brings certainty, Like it brings a lot of certainty to the farms that, in that total suite of products that they can purchase, and that they have a combination of whatever is out there that works for the farm. It really ensures or makes farms really certain that they can make these decisions all the way through the year, not just in the crop year, but marketing decisions earlier on, purchasing inputs earlier on. And so it's just not an insurance that is for that crop year, but for the full year of farming.
Every time I talk to you, two things come up. One, I go, oh, that sounds nice. Being a beef farmer and knowing the risks. Well, this past summer, we had to spray for grasshoppers, et cetera, and we don't even know if we're getting hay off, right? So there's the input and then the uncertainty, and the cost is still there. And then number two, you already said it. When are you guys getting into livestock? I'm just bugging. This is great. And, again, going back, and I said it in the last one, Mark, farmers have so much uncertainty just with the weather, with disease, with pests, with politics, with everything going on. As soon as you can grasp, like you can grab a little bit of certainty somewhere in life as a farmer, to me, like, honestly, I just feel, whew. So I think that's really cool.
Yeah, and that's really helping on any year, but a year, especially like this year, where there's still a little bit of a hangover from 2021 and the experiences that a lot of some farms made out okay because the costs of crops were pretty good and they had an average crop. But there was a lot of stresses throughout the summer with the heat and the lack of moisture in a lot of different areas. And so that's where the uncertainty lies. That most recent thing that happened in anybody's life that they remember the most will bring that. And so we literally want to help farms break down that uncertainty, understand where it comes from, break it down, and see if we can help.
Love it. Okay, I know you covered this a little bit in our first question when you were talking about what you guys do and what production cost insurance is. But can we go there again and just, now that we're talking about it, bring that back up and cover what it costs, just in a little bit more detail again?
Yeah. So what it covers, or what things it covers, or what things
what it covers.
Yeah. So we are the very first multi-peril, it's called, private crop insurance in Canada. And by multi-peril, peril is like wind, excessive wind, excessive moisture, hail, drought. So we cover all the perils that can happen to a farm. And so that's the one thing that we cover. So we're multi-peril crop insurance. But added to that, because we're revenue, not just a yield, we also cover the price as well. So we're any type of a price drop. So when a farmer is insured and they have this guaranteed revenue, and there may be a price drop in their commodities, that's a part of the revenue. So in essence, we're covering that as well. We are covering an increase of cost of production of seed, fertilizer, and chemicals. So this year, especially, a huge increase from last year. And we're covering that increase. We're covering any increase that they may experience throughout their crop year as well. Wow. So as I mentioned before, if a lot of farms this year are holding back a little bit on the nutrients that they're going to be planting with their seed, or placing with their seed, and because it's a little dry yet, because there's still some nutrients residue left over from last year not being used. So if they plant and all of a sudden it's a great opportunity to top dress, well, now I'm going to top dress and see if I can bump that crop a little bit more, and then just try to perfectly, with as best agronomy as you can, take care of the health of that crop all the way through the year. And so any increase of costs that we have, we're covering that as well. What's really the best kept secret of our program is the forward marketing and how we ensure those decisions as well. And last year was a key year where a lot of farms that had our insurance, a lot of farms, period, couldn't fulfill those contracts that they had set forward. And so there was these massive, record-breaking penalties that farmers were paying throughout Western Canada. And so our farms that were in claim were also taking care of those penalties as part of our insurance. So it actually increases their claim because they have penalties, because we're insuring that loss as well if they have a shortage of inventory on the farm.
Really?
So all these big decisions, we insure storage. So if a farm doesn't want to settle their claim till after Christmas, we're gonna protect that, keep protecting the storage of those products too, just in case, God forbid, there's a heated canola bin that goes up, and all of a sudden there's a big decrease in the quality of that. Well, we're covering that storage as well, and ultimately it's ensuring the decisions, the decisions that the farm makes throughout the year. We're going to insure every single one of those with how we actually look at farms and provide a quote.
Wow. The word that you said earlier, different, totally different, right?
It's totally different. Yeah.
Wow. That's neat stuff. Okay, perfect. So to me, if you covered everything that you want to cover there, I would like to go into a claim situation. So let's say my farm goes into a claim. I have this product. What happens? Can you take our audience and myself through that journey, how that works?
You bet. So we're going to work with the farm all the way through the summer, and touch base at different parts of the season just to see how things are going. And a lot of farms by that mid-July, end of July, we have a good idea if they are going to be in a potential claim or not. So we want to start actually working with farms at that time to assure them what they have, to assure them of the revenue that they have, and start helping them through that claims process. So the very first thing that we teach is to try to keep their books as up to date and as reconciled on a monthly basis as they can, because we're not a yield product like crop insurance, so we're just not coming to measure bins. We measure books, and so that is really key for farmers to understand. Is that the better the books, the more smooth the process.
Yes.
So that's number one. So we didn't. We made a lot of great improvements over the last 3 years when it comes to our claims process. A few years ago, before this change, we actually had to wait till financial statements were complete for that crop year before we can finalize the claim. And many farms were saying, I just don't want to wait that long, because I've got commitments that I have right after harvest, and I need money a lot sooner. So we listened to that, and now we're at the point in the last couple of years where we don't need to wait for financial statements or those year ends to be done before we can pay 100% of the claim. We can get that 100% claim payment to the farm in a lot of cases before Christmas, without financial statements and just based on their record keeping that they have on the farm. So what we do is, because we need to know and evaluate the revenue of the crop, not just the yield of the crop, we need to know the yield, obviously, and then the price. So farms can choose when they want to start the claims process by picking a date. And it's a month-end date. This past year, our first date that they can choose is September 30th. And normally it's October 30th, but this year, September 30th, because of the early harvest, because of the drought. So we wanted to get things rolling a little bit sooner. So that is the date they can pick to lock in the price of their crops that they haven't priced yet. So if they've sold anything off the combine, or if they've pre-sold in a contract, we'll take that evaluation. And then on the month-end date, that is the date that in their local area, we're going to set a price for the rest of their unpriced commodities that they have in their bins. So then that will set the revenue that we have. And then we take that and then ask for the information, their paperwork, their books. We'll see what they've spent on seed, fertilizer, and chemical. And then all that will be brought in together to see if they're actually below what we're insuring them for in our policy. And then it's just the difference. So, if that 5,000 acre farm that is insured for $1.5 million, and the black and white of it is in that evaluation, if we're only getting to $1.1 million, there's a $400,000 claim. And it's really that black and white. So we work with the farmer. The farm is in a much more in control of when they get paid than they were before. And it's been a great thing for our company, great thing for farmers, because they have that control now of when they get paid. And so this year we had a lot of our claims paid before Christmas.
Nice. Being a farmer, I could go, yeah, that makes sense. Having to wait into that Q1 when there's a lot of costs, that's a definite game changer right there.
Yeah. But there's one thing I'd like to talk about too, and that's the whole concept of farming your way out of a claim.
Ooh.
And using an insurance product to actually farm your way out of a claim. And it's a foreign concept too, but we've had a lot of farms in the past who've admitted to us that before our product, if there was, let's just say, for example, a hailstorm that happens in mid-July. So canola's flowering, smokes the canola, smokes everything else. The decision to actually get it back out there and try to help that crop rebound after that storm is a lot easier now because of how we insure. So farms will get back out and try to protect that crop as best they can, maybe add a little bit more nutrients to help it pop back out, and then hope that there's going to be a little bit more of a lengthier fall to harvest that crop. But they know that because they're doing that, they're trying to farm themselves out of the claim. And if it doesn't work, well, we're covering those costs of the extra inputs anyway. And so farming yourself out of a claim is become something that a lot of farms will really start doing because of how they're insured.
I love it. Okay, bear with me, Mark. I want to make an analogy, and hopefully I'm correct in this. I'm a business owner, and I'm big on a successful business Mindframe. Okay.
Yeah.
So when I'm listening to you talk, I think about traditional insurance kind of as, okay, bare minimum costs. I don't want to add more. I don't feel good about this. What's going to happen at the end of the year? I just don't know. I don't know. Okay. So kind of like that retraction mode, like that coming in.
Yeah.
That limited mind frame, right? Now I go and I'm listening to you, and right away, shoulders go down. So for me, that means I feel more at ease. The uncertainty's taken away. And it's like, ooh, how can we improve? How can, exactly like you just said, getting your way out of a claim. It's a different mind frame, right? Like a little bit more progressive, a little bit more success oriented. Is that a good analogy? That's what I'm feeling on the inside.
Yeah. And we've had so many farms have said after they really understand. And so it takes a little bit to understand our product, even though that it's fairly simple. It's still new, and can I really trust this product to do what it says? So sometimes it takes a year or two before their farms really sink their teeth into how to use this for profitability, which is another foreign concept. How can you use insurance for profitability, not just insurance? But once they do, they say we've taken every year we do this, but now we take a real hard look at our crop plan, real hard look at our agronomy. If there's any little thing that we can improve, that can improve our chance of getting better by 5%. Christian Hebert has that 5% rule that he's talked to many people about. By 5%, by 2%, then I'm gonna get out there and do that. Agronomists are real happy because now a lot of farmers will listen to them a little bit more because they're wanting the farms to do this, but there's always that cost and the uncertainty for actually making a change. It becomes a lot better now. And I'm not just talking about we're the be all and end all. It's about having that package together of products for your farm. traditional crop insurance has been around for many, many years. It's helped farms through a lot of hard times. It continues to do that this last year especially. And it's not all pick one or the other. It's how can you combine each to really give you that full sense of security and motivation. Doesn't matter what year you're facing, to try to hit it out of the park every single year.
I love it. As we go into plant 2022, I think there's a lot of excitement for various reasons, but also a lot of concerns, right? So these are powerful, timely conversations, and you guys are different. So I'm excited to have you on the show doing these segments to share a little bit more about powerful tools for farmers that they can use to improve their operation, right?
Yeah, and beyond just talking about production cost insurance that our company has, we continue to educate farms on how to use provincial crop insurance better. A lot of farms still don't really understand, because it is a complex program. The federal program, agri-stability, still a lot of questions about how can that actually help my farm, and so we educate about that as well, and really get farms to understand not just what is out there, but how they can use each of these products differently on their farm. And it really, farmers are spending more money on insurance every single year. And the reason for that is because costs of production are getting more. There's more and more risk out there. So let's help farms really, get to that point where they can, have those shoulders go down and just go, you know what, I'm good. I'm going to go for it. And if it doesn't work, I'm still good.
Yeah, I love it. Okay, those are powerful words to wrap up. I love that. If somebody in our audience would like to connect with you guys, how do they do that?
Best is to go to our website. So our website is agrisksolutions.ca. And on there, you'll be able to, on the landing page at the top, there'll be a little phrase, our team. If you hover over top of our team, then up will pop a couple different options, and it's find an advisor that you want. And our advisors are licensed people that have a ton of training on the different products out there. They're all farm, all from the farm for pretty much. They all live in the communities that they serve, and they're there to help educate. And so to go to the website to find your local person to do that, or they can call the office, and we can try to help them navigate and find somebody to help them in their communities. And that is 306-704-GARS. So 306-704-4277. We'd be happy to educate as many people as we can. And this year, it's an unprecedented year with how many new farms are seeking just to find out what we're all about.
I love it. Thank you so much for your time, Mark. I really appreciate your time and you sharing the wisdom, helping farmers. We really need to understand our uncertainty and our risks on the farm. And I am so happy to be having these conversations with you. So thank you so much.
Yeah, pleasure's mine. Thank you.
Perfect. And you in the audience, thank you for tuning in. If you enjoyed this as much as I did, like it, share it, get it out there, so other farmers can hear about what Global Ag Risk Solutions is doing and how it can impact their farming operation too. Thanks, guys. See you next time. Bye-bye.